All right, so let's jump into it. You've probably seen it. Palantir's stock just went crazy in 2024.
Yeah.
Like 357% surge.
Yeah.
Nabbed a NASDAQ 100 spot and top performer on the S&P 500 up 340%.
Wow.
But here's the thing. Wall Street analysts are saying it's going to drop 40%.
Really?
Yeah. So that's
a big difference.
it is a very big difference. So today we're going to do a deep dive on Palantir and figure out what is going on.
Yeah.
Like, what is driving this? Are they a revolutionary tech company, or is this like an Icarus moment?
Yeah, it's a very interesting puzzle because Palantir is not your typical Silicon Valley company, right?
Right.
These guys are building platforms for like US and UK counterterrorism units.
Oh, wow. So not your everyday software.
No.
I mean, that's kind of adding to the mystery around them. But,
Yeah.
like, is there actually anything there?
Oh, there's definitely something there. I mean, Morningstar called them an AI leader.
Okay.
And for good reason, Gotham and Foundry are their platforms, and they're designed to take these massive data sets and make sense of them.
So, like, connect the dots and see the patterns that you wouldn't normally see.
Exactly.
Wow. So that...
And that's powerful. I mean, that's powerful stuff.
Yeah. That could be the difference between stopping a terrorist attack or finding a massive financial fraud.
Absolutely. And those capabilities are in high demand. Look at their Q3 2024 results.
Yeah.
30% revenue growth year over year. Operating margins more than doubled.
Wow. That's impressive. But that kind of brings us back to that big gap between their performance and what Wall Street's saying.
Right.
What's going on there?
Well, analysts like the ones at Cantor Fitzgerald use this thing called valuation to kind of figure out if a company's stock price is actually, worth it.
Right.
And they look at financial performance and future potential and all that, try to predict the future, basically.
Yeah.
And with Palantir, they say there's potential, but they're setting a price target 40% lower than the current price.
Oh, wow. That's a big red flag.
It is.
What are they seeing that's making them so nervous?
Well, one of the big things is this possibility of reduced government spending.
Oh.
Especially with all this talk about the Department of Government Efficiency and streamlining budgets.
Right.
Governments are Palantir's biggest customer.
Yeah.
So any cuts there are gonna hit them hard.
So less money for contracts equals less revenue for Palantir.
Exactly.
Simple equation.
Yeah.
But big implications.
Big implications.
So what else are the analysts worried about?
Well, there's also this rise of new AI companies.
Okay.
And some of these companies are really focused in on specific industries.
Right.
And they might be able to, offer lower prices than Palantir.
So it's like David and Goliath in the AI world.
Kinda.
But, it's not just challenges from the outside, right?
Yeah.
They've got some internal stuff going on too, particularly with their business model.
Yeah, their business model is definitely a double-edged sword because they prioritize those deep long-term partnerships and building a really good product over just quickly getting clients. And that's great for stability and trust. But Wall Street is all about short-term gains and certainty.
Right.
And Palantir's long and kind of unpredictable sales cycles make analysts nervous.
It's like they're playing chess and everyone else is playing checkers.
Yeah,
And
check.
that's not good for the, short-term games.
Not really.
So their long game might be brilliant,
It might be.
but it just doesn't fit the Wall Street playbook.
Not the typical playbook.
No. And then you add in this thing that they're calling the people problem.
Oh, yeah.
Right. Palantir's stock price is so high that employees have all these stock options.
Right.
And they're about to vest. So just to clarify, stock options are like the right to buy company stock at a certain price.
Yeah.
And if the stock price goes way up,
Yeah. Which it has.
those options become super valuable.
Incredibly valuable.
Yeah, and so that's where the problem is.
Right, because if a lot of employees decide to cash in all at once, that can trigger a massive sell-off.
Right.
And the price plummets, and that could really hurt the company long term.
So their success could actually backfire on them.
Yeah, it's a crazy paradox.
Yeah, and we're talking potentially hundreds of millions of dollars.
Hundreds of millions. Cantor Fitzgerald estimates that if all the outstanding stock appreciation rights,
Which is a type of stock option?
if all of those were exercised, it could result in a $959 million payout to employees.
Oh my gosh, so
It's a lot of money.
it's a big reward for the employees, but it could also be a financial earthquake.
Absolutely.
Wow, so we've got external threats, internal tension, and now this potential stock option tsunami.
Yeah,
Palantir's juggling a lot, even for a company at the cutting edge of AI.
they are. And to add another layer of complexity, there's their company culture.
Culture. You don't hear about that too much in the tech world.
No, you don't, but Palantir is known for this very intense, mission-driven, almost secretive culture.
Okay.
They're really selective about who they work with, and they prioritize projects that align with their values.
So it's not just about the bottom line for them. They're actually trying to make a difference.
That's the impression you get. But this culture, which has been a big part of their success, could also be a problem as they navigate the public markets.
Okay.
Public companies have all this pressure to be transparent and accountable to their shareholders.
Yeah.
And Palantir is very secretive.
So another tightrope walk for them.
It is.
Can they keep that secretive kind of James Bond-esque culture and still satisfy Wall Street?
That's the question.
Yeah. And speaking of Wall Street, there's this one key metric that Cantor Fitzgerald keeps bringing up: recurring revenue.
Yeah.
Recurring revenue is so important for subscription-based businesses.
Absolutely.
I mean, it's the difference between having a stable salary and having to rely on freelance gigs.
Exactly. And that's where some people see a weakness for Palantir,
Okay.
because their recent commercial growth has been very reliant on these service-based contracts,
Right.
which are not as predictable as software subscriptions.
Right. So their overall growth looks great on paper.
Yeah.
But the quality of that growth might be setting off alarm bells.
Yeah, you could say that.
So we've got a company that is clearly brilliant,
Yeah.
innovative, but also secretive, successful, but also vulnerable.
Very interesting company.
Definitely a company of contradictions.
Yes.
Any final thoughts before we move on to part 2?
Well, I think the big takeaway is that Palantir's future depends on them navigating all these complexities while staying true to their values.
Right. So they have to find that sweet spot between being innovative and sustainable.
Yeah, it's like they're trying to build a bridge between the world of classified operations and the world of public markets.
And it remains to be seen if they can actually pull that off.
It does, and we'll delve deeper into those possibilities in part 2 of our Palantir deep dive.
Welcome back to our deep dive on Palantir. We barely scratched the surface of this company that's kind of shaking things up.
Yeah, it's a really unique company. I mean, you don't
Yeah.
see a lot of companies that are so involved in government intelligence and also dealing with Wall Street.
It's that push and pull that I find so interesting. Their commitment to those long-term partnerships, the ones that are helping governments stop terrorism and helping businesses uncover fraud. It's admirable,
Yeah.
but it's also what makes them such a puzzle for investors.
Yeah, because they're not focused on that rapid growth that Silicon Valley loves.
Right. It's almost like they're on a different timeline.
Yeah, they're playing a long game.
They're saying we're building something that really matters and we need time and the right partners to do it.
Exactly.
But the question is, can that approach actually work in today's world?
It's a good question.
Can they really afford to play the long game when everyone else is racing to the next IPO?
Yeah, that's the million-dollar question. Can Palantir convince investors that their slow and steady approach is actually better?
Right. And what happens when those stock options start vesting and employees cash out?
Yeah, that's a big concern.
That $959 million payout could really shake things up.
Absolutely. It could scare off investors.
It's like they're facing a crisis of their own making.
It's a tough situation.
And then you add in their unique company culture.
Right.
This intense, mission-driven, secretive culture has been a big part of their success.
It has.
But can it survive the scrutiny of the public market?
Well, that's another big challenge, right? Public companies are expected to be transparent and accountable to their shareholders.
Yeah.
And Palantir is not exactly known for being open.
So they've got to find a way to balance those competing pressures.
Yeah, it's a tricky balancing act.
Yeah. And let's not forget the constantly changing landscape of AI.
Oh, yeah, that's a huge factor.
New competitors are popping up all the time.
All the time.
So Palantir can't just sit back and relax.
No, they have to constantly be innovating and adapting to stay ahead.
Which brings us back to that all-important metric, recurring revenue.
Right.
Wall Street loves recurring revenue for a reason.
It provides stability and predictability.
It shows that a company is viable in the long term.
Exactly.
It's the difference between having a reliable income and constantly hustling for your next gig.
Exactly. And that's the problem some analysts have with Palantir.
Yeah.
Their recent growth has been driven by those service-based contracts,
Right.
which aren't as reliable as software subscriptions.
So it's not just about growth, it's about the type of growth.
Exactly.
Wall Street wants to see that steady stream of recurring revenue.
They want to know that the company's going to be around for the long haul.
So we've got a company that's brilliant,
Absolutely.
innovative,
Yeah.
but also facing some serious challenges.
That's right.
What are some of the scenarios that could play out for Palantir?
Well, let's explore those possibilities in part 3 of our deep dive. We'll look at the different paths they could take and what it all means for investors and the future of AI.
All right, so welcome back to our Palantir deep dive. We've
Mhm.
been talking about their technology, their culture, and that balancing act they're doing between innovation and Wall Street. So what are some of the scenarios that could play out for them?
Well, we've established that Palantir is at a crossroads. Their future really depends on how they navigate all these challenges and opportunities. So let's think about a few paths they could take.
Oh, okay, so let's play Future and Palantir. What's our first scenario?
Scenario one, Palantir just doubles down on their current strategy. They stay focused on their mission to prioritize those long-term partnerships over growing too quickly.
So they're sticking to their guns. They're betting that their approach will eventually win over Wall Street. What could happen if they do that?
Well, if they can show that their partners are getting real value and that their approach is profitable in the long run, they might just change some minds on Wall Street.
It's a risky move,
Hmm.
but it could pay off big time if they can prove that their model is the future.
Yeah, imagine Palantir becomes like a magnet for investors who want stability and long-term growth. It would change how we think about tech investments.
That would be a huge shift. Okay, so what about scenario two? What if they decide to play by Wall Street's rules?
So scenario two, Palantir gives in to the pressure and starts focusing on growing as fast as possible. Maybe they even sacrifice some of their selectivity to get more clients.
So they trade in their suits for hoodies and start chasing those hockey stick growth curves.
Exactly. They might see their stock price jump up and attract a lot of new talent, but can they do that without losing what makes them special?
Right. Can they become a move fast and break things company and still be Palantir?
It's a good question. And even if they can make that change, there's no guarantee it'll work. The tech world is tough, and they'd be going up against some really big players.
So it's risky. They could lose what makes them unique.
Oh,
Okay, so for our final scenario, let's think about a middle ground.
okay, so scenario three. Palantir finds a way to balance the two approaches. They keep their core values and their commitment to those strong partnerships, but they also find ways to adapt to what Wall Street wants.
So they become masters of the tightrope rock.
Yeah, they balance their mission with the realities of the market.
How could they actually pull that off?
It would take some flexibility and creativity. Maybe they develop new products or services that create that recurring revenue that investors love, but they stay picky about who they work with.
So they find a way to show Wall Street that their long-term vision can actually translate into profits.
Right, and they might have to be a little bit more transparent about their operations and finances without giving away any secrets.
That's a tough balance to strike, but it might be the best way forward. They stay true to their values, but they also learn how to speak Wall Street's language.
Exactly. It's a path that needs both vision and practicality. They have to convince investors that their unique approach is actually an advantage, not a weakness.
So for our listeners who are trying to understand Palantir and what their future holds, what's the main takeaway here?
I think the big takeaway is that Palantir is a company at a crossroads. They're innovative, but also uncertain. Their future is wide open, and the choices they make in the next few years will determine if they change the tech industry or become a cautionary tale.
It's a good reminder that even the most innovative companies have to overcome huge challenges. And being successful in tech isn't just about making great products. It's about building a company that can adapt and survive. Thanks for joining us for this deep dive into the world of Palantir.